Hello, everybody, and welcome. This is External Financial Reporting and Corporate Social Responsibility, my Accounting 262 course. Today, we're going to be looking in depth at Form 10K, or a company's annual report. So my disclaimer and copyright notice: the information and opinions in this presentation are those of myself and not my employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2025 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. Note that this presentation will refer to companies and third parties. I do not claim any copyright that belongs to those third parties. Okay, so let's go ahead and talk about Form 10K, which is a company's annual report. So first thing is, it has to be audited, meaning that a company that is registered with the PCAOB will be going through and auditing the financial statements. When I go through and I look at Meta Platforms, again, I love Meta. Well, I love their financial reporting. The first thing you're going to see, if I go to item 8, I'm going to basically say, look right over here to the stockholders and board of directors of Meta Platforms. You come down over here and you look at signed by Ernst and Young. So when you go through, these have to be audited, right? Has to be audited, right? Cannot, for an annual report, requires that it has to go through an audit. So as I mentioned in the prior video, you have different items about internal controls. Now, whether or not a particular company has to be compliant with internal controls, or if it does not have to be compliant with internal controls, what you're going to go through and see is on a Form 10K. If I go over here and look at the filing, what you're going to notice is on Meta Platforms filing that we were just looking at over here. So if I look at the 10K, so this is the document, but if I'm looking at the exhibits to the 10K, on this exhibit 31.1, I'm going to find a certification of this. This is basically under the Sarbanes-Oxley Act of 2002. You have to go through and basically say that we are responsible for maintaining disclosure controls and procedures. So this is a very important part of the 10K filing. If I come down over here to Exhibit 31.2, I, Susan Lee, I'm right over here. She is the CFO of Meta Platforms. She also has to make similar certifications. Then you look over here, 32.1, basically certify, was adopted as part of this, basically complies with the requirements of 13A or 15D, and there you go. So you're going to see these different certifications that the CEO and CFO have to go through and basically make whether or not the company is accelerated or unaccelerated or not accelerated. The for the 10K and 10Qs, the CEO and CFO has to sign everything for the 10K that has to be signed off on by the audit committee or by all the members of the board. So if I go ahead and look at this document here, which I'll be including, these are like the instructions in terms of how you go through and file a 10K. And this is basically how they want to go through and have you go through and prepare the report. And as we kind of, and I've detailed these out here, and it kind of like, well, all these different ones: business, risk factors, unresolved staff comments, cybersecurities, properties, legal proceedings, mine safety disclosures, market for reserved equity, registrants equity. And you look at all these different requirements of this form. Now, I could sit here and read this, or what we could go through and do is to look up a particular company's 10K. And because I feel as though I don't want to be picking on Meta Platforms all day. Let's go ahead and look up another publicly traded company. Let's go ahead and take a look at Salesforce. Okay, so may the force be with us right over here. Let's go ahead and take a look at the 10K for Salesforce. So the first thing we go through and notice is that Salesforce has a year end of January 31st. I'm assuming that is because they are more than likely they're helping out retailers, but let's just kind of go through and take a look at, and therefore they're going to have an off market year or a delayed year. So as we come over here and we take a look at this, you'll kind of see all of these different items like business risk factors, unresolved staff comments. This is all going to parallel the requirements of the 10K as outlined by the SEC. So you're going to see this. And what's nice about most of these filings, if I want to go to the business, I can just click on this part here. But let's go through and take a look at Salesforce. So you've got they're a Delaware corporation, but their corporate offices are on Mission Street. Coming down over here, is a well-seasoned issuer. They've been around for quite some time. Over here, they are a large accelerated filer. And coming down over here, documents incorporated by reference. So for the first thing that they're going to do in a 10K is that you're going to basically, this is the attorneys talking, right? You're going to have like a nice big disclaimer of forward-looking information. The reason is because when we do our management discussion and analysis, remember, management's preparing these financial statements. The auditors are going through and then auditing the numbers. And then the board member, the audit committee is basically going through and then checking, are the auditors are independent? Are there any reportable findings? What's going on? But when you go through and look at this, they're saying words such as expects, anticipate, aims, projects, intends, and variations of such words and similar expressions are intended to identify such forward-looking statement, which may consist of, among other things, trend analyses and statements regarding future events, future financial performance. And what they're trying to say is, well, hey, as of the date of this document, this kind of seems to be okay, but you're kind of looking at this right over here. This is essentially helping them with essentially giving them a huge disclaimer as to what you're going to be seeing in the document. Now, the audited financial statements, they're the audited financial statement. Those are the numbers. But as we're going to see in this document, we're going to have a lot of different kind of discussion of the company. So the first item number is the business section, item 1. So part 1, item 1, business. So it talks about Salesforce. We are a global leader in customer relationship management technology that brings companies and their customers together. Founded in 1999, and as we kind of go through over here, it talks about their AI customer 360 platform. Salesforce is committed to a core set of values, right? So this is going through trust, customer success, innovation, equality, and sustainability, right? Foremost among these is trust, which is the foundation for everything we do. They then talk about their service offerings. They then talk about their sales offerings, other service, platforms, and others. They own Slack. They own a lot of other different, they have a lot of other different products. Coming down over here, data cloud, industries, business, the business benefits of using our solutions. So this is really like, why would companies want to go through and use Salesforce? Again, we're talking about our business. This isn't puffery. This is essentially really talking about themselves. Why would a company want to go through and use Salesforce's solutions? Our business and growth strategy, expand relationships with customers, increase geographic reach, focus on industries and new products, leverage our partner ecosystem, promote strong customer adoptions, Mergers and acquisitions, we're going to grow by acquiring other companies. So we're really kind of going through over here and talking about our business. One of the other things we're also going to be talking about too is our competition. Who are the competitors essentially for Salesforce? Or assuming who are the various different competitors basically for Salesforce. And they'll sometimes go through and list that over here. But again, we also, you're kind of going through over here. They have different events going through. They also talk about intellectual property. So again, this is a very overview and broad of their business. I will include a link to this. So if you want to go through and take a look, but again, all of this information, this is actually, so if you're planning on interviewing for a company, this is what I would go through and review because they've got to go through and discuss their entire business. So available information and then basically where their principal offices are located. So let's now get into the more fun stuff. So that was item one, or business. The next one over here are something called risk factors. So what are the elements of risk that something like Salesforce would encounter? So any breaches in our security or measures or those of our third-party data center hosting could cause problems, defects or disruptions. Strategic and industry lists are an inability to compete effectively in intensely competitive markets, right? Legal, regulatory risk, privacy, concern, and laws, lawsuits against us by claims against third parties. So what we're talking about here is in terms of risk factors, is that you basically outline or you lay out any kind of like basically you give a summary of all these different risks. And we see over here like general risk, like if the economy goes bad, that could impact our business. And you generally want to be very broad when you're going through and talking about this, but not like overall broad. If we get hit by a meteor, we could go through and blow up. You want to talk about risk factors that are going to be specific to your industry. So right over here, you talk about this, basically you talk about our risk factors, and then you say these are the different types of going through. Now, these risks are mitigated to the extent possible by our ability to maintain and improve business and data governance policies, enhance processes and procedures. So again, you kind of lay out these different risks, and then you're going to kind of go through and more in depth explain them. And then you're going to kind of go through and say, you know, how you're going to go through and mitigate them. If you don't include risk factors, or if you don't say something that was obvious and all of a sudden the company is impacted, that could lead to a lawsuit. Only one who wins in a shareholder lawsuit are the attorneys. But generally, when it comes to disclosure, you're better off disclosing more than to more items than too little of items. So here's another one. If our customers do not receive their subscription for our services, or if they reduce the number of paying subscriptions for the time of renewal, our revenue and current remaining performance obligation could decline and our business may suffer. So over here, it's like you kind of tell them, it's like, hey, you know, what are the things we're going to do? And again, you're kind of saying that these are the things that could negatively impact us. So as you look at this all over here, strategic and industry risks, over here, our ability to maintain and enhance our brands. We're subject to risks associated with our strategic investments, including partial or complete loss of invested capital. So we manage a portfolio of strategic investments in both privately held and publicly traded companies focused primarily on enterprise cloud companies. So similar to Amazon investing in Rivian, I think Amazon wrote off a pretty big chunk of that amount soon, I think, after they going through and went public. Social and ethical issues with AI, ESG, like right over here, ESG goals. And if you're looking at this is like, well, what can happen if we don't go through and do this? So legal and regulatory risks, privacy concerns. So as we look at this 10K, we're now at page 25. And my goodness, we've got a ton of different basically risk factors, financial risks. And my advice to you is that if you're ever going through and having to, what I would do when I was doing my financial reporting is you look around the internet for a business that's similar to yours, copy it and modify it. That's the best way to go. And the SEC encourages that because that's what they do. Now, as accountants, this is not something that we're generally going to be going through and doing, right? So, as accountants, most of the time, what we're going to be going through and doing is this is going to be really be reviewed by the attorneys. There can be no assurance. Basically, we announced a quarterly dividend pos. There can be no assurance that we'll continue to declare cash dividends, right? So if all of a sudden the cash balances go down, they may not want to go through and do this. Natural disasters or other events beyond our control may materially adversely impact us or affect us. Climate change may have a change on our business. So those are the risk factors, right? So that's a pretty big chunk. We're right now on page 34, and it's a pretty big chunk of the 10K. Now, right over here, unresolved staff comments, right? So and this is referring to the Securities and Exchange Commission. Are there any comment letters that are outstanding? Generally, the SEC will go through and review disclosures made by companies on a 10K, 10Q, S1. And are there any comments that the company has not yet addressed? My suggestion to you is that if the SEC tells you to do something, go ahead and do it, as long as it's within reason. So makes your life a lot easier. So cybersecurity, as a global leader in CRM, this is talking about the cybersecurity risk management and strategy, right? So this is an item over here that's going here and talking about. Now, for a company like Salesforce, this is going to be extremely important. But if I come over to say, I don't know, let's look at the Home Depot really quickly. Okay. So if we pull up if we pull up the annual report over here and we go to cybersecurity and right over here, and it's really about, here's what they have to go through and do. So, obviously because Home Depot has an online presence and they're keeping their customers' data online, that's probably going to be, it's going to be pretty significant disclosures. So over here, what you're really going through and talking about this is like, what are the procedures that you're doing with regards to cybersecurity? So the next item over here, and again, this is going to be something that as an accountant, you're not going to have to do, but you're obviously going to need to be aware of it. As an auditor, you want to basically make sure that the representations being made there make sense. So as of January 31st, our principal offices, we've got basically consists of approximately 900,000 square feet in San Francisco, and then basically lease to others. We lease other properties in the United States. So coming over here is that you see over here, like, okay, for item 2 for properties, this is just, again, another disclosure that we have to go through and do. For the next one over here, or for legal proceedings, we evaluate all claims, the outcome of all claims, and then it's telling us to go through and see note 14, legal proceedings and claims, the consolidated financial statements of item 8, part 1. So let's go through and find that over here. Okay, so right over here, there's Slack litigation, and that's pretty much it. That's like the only thing. Basically, we 7 purported class actions lawsuits were filed against Slack, its directors, and certain officers in regard to their registration statement filed with the SEC. And so there you go through and see their lawsuits. Now we'll do something kind of fun, which is what I always like to do when I talk about lawsuits of publicly traded companies. Let's go here, go back to sec.gov. We're going to search filings and we're going to do something. Let's go to Johnson and Johnson and let's go to the 10K and let's go to item 3, legal proceedings. Okay, so note 19 and our note basically in consolidated financial statements. Let's do this pause real quick. So when you file when the auditors are doing their procedures, they're going to have to go through and talk with every single attorney that the company has engaged with. So when we look at the legal proceedings right over here, basically, here we'll go ahead and start page 89, matters concerning talc. This is again Johnson and Johnson. Yeah, more lawsuits. A lawsuit. Lawsuits, matters concerning opioids, product liability, um, intellectual property lawsuits, government proceedings, general litigation. And so we went from so like literally 11 pages of type. So that's something that, every company is going to be different, right? Salesforce, for example, doesn't have that much litigation, but other companies have more litigation depending upon the type of business that they're going through and being engaged in. So let's go back up over here and just pause real quick. So then we see item 4, mine safety disclosures, right? It's an item that's listed on the 10K form right over here, mine safety disclosures. But again, it's really not going to be applicable because Salesforce does not mine different things. I don't know. So coming over here, looking at the information about the executive officers of the company, and what you'll see over here is they're giving essentially like a rundown of every person who is here within the company. And you'll basically see in their roles, this is not the directors, but this is basically the management of the company. And as we look down over here, other information, our common stock is traded, market information for common stock, dividend policies, they're starting to pay dividends, stockholders, registered basically of the stock. And then you kind of go through and see what the performance of the stock has been. Again, you could probably find this on any website. And now we get to the interest. So even you see here, item 6 reserved, item 6 is reserved. So again, now we get into the interesting part, which is the MD&A. The management discussion and analysis is management's opportunity to go through and talk about what happened during the period under review. So this is where management gets to go through and talk about this. And again, when you're looking at this, forward-looking statements, right? So what you'll see here is like basically you'll see again an overview, and this should really be consistent with the business parts that they were talking about. Revenue went up by 11% year over year. Income from operations was 5 billion. Earnings per share, cash, and so you're kind of going through and highlighting these different parts. Sources of revenues, where do we get them from? Subscription and support services, professional services. And you kind of go through and look at this in terms of cost of revenue, R&D, marketing and sales, critical accounting policies and estimates, and then results of operations, right? So as you're kind of seeing here, subscription and support is roughly about 93% of their total revenues, which has remained consistent over the past few years. And then you're kind of going through the increase in subscription support revenue was primarily caused by volume-driven increases from new business. Subscription, so again, when you're going through and looking at this, like where are their revenues coming in terms of geography, right? The Americas, Europe, Asia Pacific, is that going up or down? Again, it really kind of just depends on how you're going through and looking at this. You've got cost of revenue. And when you look at this over here, like so R&D looks like it went down slightly from the prior period. But as we look at this, we expect that R&D will likely remain consistent as a percentage of revenue as we're continuing to invest in technology. So this is where management goes through and gives their story about what happened with the company. And again, as an auditor, what you would be doing is you would be taking this is prepared by management. You're taking what you've done in the financial statements and saying, okay, do these numbers have support? Right? Because you don't, if the management is lying about what they're putting in their MD&A, we don't want to see that happen. One of the other parts over here is a discussion of liquidity and capital resources. This is extremely important because will management have basically enough cash to last into the foreseeable future? This is also, if a company doesn't, they have to worry about basically what we call a going concern opinion. I'm looking at this over here, investing and financing, basically repaying down debt, share repurchase program, cash dividends, contractual obligations. And over here, we're going into the next section, quantitative and qualitative disclosures about market risk, foreign currency exchange risk, right? So if you're doing business in multiple countries, that's also going to be a challenge. Interest rate sensitivity. What is your exposure to different interest rates? And you can kind of see this over here. The contracted interest rates, if all of a sudden these had to be refinanced in the very near future, that would probably cause a lot of problems. So now we get to finally the financial statements. So the first thing you'll see is the auditor letter. This is also, they've been Ernst & Young has been auditing Salesforce since 2002. And then this is over here, basically their opinion on internal control over financial reporting. And here you're going through and looking at their financial statements. Now, one of the things is in accounting, we oftentimes don't really kind of focus on the footnotes to the financial statements, which are just as important as the financial statements themselves. But over here, you see their summary of significant accounting policies. And then note 2 is going to be significant accounting policies. 2 is talking about revenues. So when we're looking at over here that the financial statements and supplementary data, this is, all of the things that we're really kind of going through and seeing that management has prepared and is required to prepare basically under GAAP. And we kind of go through down here and we look at all of these different disclosures and these different footnotes. Lots of fun to prepare. So as we kind of getting over here to item 9, changes and disagreements with accountants over on accounting and financial disclosure, there were none. Controls and procedures, right? So over here, basically talks about management's report on financial reporting. As we talked about earlier, this is going off to the audit committee, changes internal controls, inherent limitations. So basically, so basically, other information. This is basically saying a Rule 10b-5 trading arrangement of the company's common stock, subject to certain conditions. Satisfy. Okay, so when an insider is basically needs to sell shares, right? You have to do so, call that basically a 10b-5 trading agreement. And you want to basically make sure that you're compliant in terms of, not not, oh, we just released earnings, so I know we're going to have great earnings. This is basically to protect officers and directors from shareholder lawsuits about trading under insider information. It's called a 10b-5 plan. Okay, so item 9C, disclosure regarding foreign jurisdictions, not applicable. Item 10, basically directors, executive officers, and corporate governance. Talks about the code of ethics, audit committee. Right over here. It's all on the website. Executive compensation. Okay, this is now basically in our proxy statement. So we're going to look at that a little bit later. That's called the definitive 14A. Security ownership of beneficial owners, certain relationships and related transactions, and director independence. Principal accountants and services. Again, this is going to be in the proxy statement. Exhibits. You got a 10K summary. And then you've got over here all the different items like of governance, restated of. So here you go. Basically, restated certificate of incorporation of Salesforce Inc. And let's go down over here. All these different exhibits, and then you've got the signatures. Basically, you've got by Salesforce, Amy Weaver, President and CFO, Sandeep, EVP and Chief Accounting Officer. And then you've got all the signatures over here because it is, in fact, a 10K. So that kind of goes through over here and kind of shows you the different parts. Again, my best advice to you is if you're dealing with this when you work as an auditor, this is going to be something that you're going to have to get a grasp on this. So the better, the more, and I always tell my students this is that if you're going to go through and work on a client, the best possible advice I can give you is to pull up all of the publicly traded filings of that company and go through them prior to starting an engagement. Couple different reasons why. If you happen to run into the CEO or CFO, you'll have something to go through and talk about as an auditor. And again, it's just good practice to kind of go through and do so. So in any event, I want to thank you for watching today. I know this video was like probably a little bit on the longer side, but hopefully you got out of it what you wanted. Please remember to like and subscribe. And if you have questions, please feel to reach out to me by leaving a comment below. But I look forward to seeing you on the next video. Have a great day.